Welcome back to the LPR Trading Group YouTube channel. It's Dave again. I've got a pretty simple video for you guys today, and I'm going to talk about risk and how we can scale our risk. This may be one of the most important videos that we've launched on this channel yet, and I think it's going to give some insight to a lot of you guys on how you can scale your risk up during the day. I know what most people are doing is if they take a $10,000 account, maybe they're trading 0.5%, 1%, or 2% risk per trade, and scaling that as their account gets bigger. This is also totally fine. There's also a way you can do this intraday. And what this is it's an accelerated, I saw a typo here, accelerated P&L. So it's an accelerated versus stagnant risk approach. Okay, so I'm going to explain how this works. What we're going to do in this example here, we're just going to say our risk per trade is $100. And we're making on average 3R per trade, so 3 times our risk, which means we would be making $300 on our winners and losing $100 on our losers, right? Well, if we have a stagnant risk approach, let's just say we won every single trade on the day. In this case right here, with the stagnant risk approach, we'd be risking $100 per trade, which is totally fine. And the outcome of that on the winning side would be we're winning $300 per trade, right? So we'll type in a few 300s here. 300. And we'll go like this. Okay, so the outcome is we win $300 each trade. Now, if I take this and I sum this up, it gives us a $1,500 day, which is very respectable. There's nothing wrong with that. But if we take a different approach here and we go with the accelerated risk approach, how does this work? Well, first trade of the day, we'd risk $100, which is totally fine. Now, our outcome would be the same if we won that trade. We'd make $300. But what I want you to think about here is because we're coming off of a winning trade, in the market we want to play strength to strength and we want to accelerate our winners and accelerate our winning days. So how do we do that? Well, if we're risking $100 and you make any more than 2.5R on your trade, preferably 3R plus, think about taking half of what you won and putting it on the next trade for the risk allotment. So for example, on the next trade, I would take half of 300 and risk the 150, right? If I win this trade, it would equal 450. On the next trade, I would take half of the 450 and risk it on the next trade. If I won this trade, I would make 675. Now I would take half of 675. Let's do this proper and get a calculator out here. So we go 675 divided by 2, we got 337.50. So 337.50. We get the calculator back out times 3 because we're looking to make 3R on the trade. 10, 12, 50. 10, 12, 50. Take half of 10, 12, 50. 506.25. And we'll just make sure we're doing this right. So divided by 2 times 3, 1518.75. 1518.75. Calculate this, we'll sum it, and now we've got a $3,956 day as opposed to the $1,500 day. Now, of course, this is a day where you're running a 100% win rate, but let's look at the difference between the $1,500 winning day and the $3,900 winning day. This is significant, right? This isn't only double, this is almost triple what you would have made on the stagnant risk approach. Well, now we'll put this day in the calendar like this, right? And we'll say this was a full winning day. Now what we're going to do is we're going to stagger this up a little bit and try and confuse the system. So I'll take this and we'll say on day 2, we started the same with 2 winning trades. But the next trade here, we would have to risk 150 and we lost it. So it means we lost $150. This trade right here, we'd still be risking the stagnant 100 and we would have lost $100. Now, this is the important part. If you are looking to use an accelerated risk approach, the important thing to do is once you lose a trade, you must revert back to the stagnant risk value, which is $100. Now let's say we won that trade. we would win 300. Same with the other side, risk 100 to make 300. Now we accelerate again and we risk 150, half of what we won. And unfortunately, we lost 150 again. In this case right here, we would lose 100. Last trade, we go back to the stagnant risk approach, even on the accelerated, because we have to drop back down to our original risk allotment if we lose a trade. And what do? We make 300. On the stagnant approach, we risk 100 and we make 300. Let's get some totals here. So we total this for a total profit of 700. We total this for a total profit of 600. Okay, with the accelerated risk approach, we lost more on our losing trades, and we lost both of our bigger trades when we tried to start accelerating. The difference on the day is almost negligible. We're $100 short, and we gave ourselves 2 opportunities to accelerate our risk and make more than 50% of the stagnant winning day. Now, if you get into situations where you can accelerate 2, 3, 4 trades in a row, 2, 3, 4 trades in a row, if we look at the sum of all these, that equals 2438. Even just winning 4 accelerated trades in a row beats winning 5 stagnant trades in a row. Okay? If we win 3 accelerated trades in a row, you look in the bottom right corner here, we've got 1425. 3 accelerated trades in a row almost equals 5 stagnant trades in a row. Okay? But at the same time, the important part is when you lose an accelerated trade, you must drop back down to the stagnant risk profile. This is something that traders don't do. Typically when traders are losing, they're getting bigger to try and make it back, then they lose more. When traders are winning, they're either staying at the same size or getting smaller or stopping their trading because they don't want to give it back. Now, I do believe you should have a goal on the day. You could have a goal on the day if you'd like. For me, my goal is time-based. I don't want to trade past 11 or 11:30 because I just know I don't trade good past those times during the lunchtime lulls. So if I get 2 trades in before 11:30, great. If I get 6, great. If I get none, great. That's just how it goes for me, okay? Let's do another, actually we'll color code this a little bit so we can just see it better visually. We'll do this, we'll do this. We'll do this, make these green just so we know we've got these winning trades and losing trades. So day 1, we run 100% win rate. Day 2, we run a 60% win rate. Okay, let's go to day 3 here. Day 3, we risk 100, we make 300. Okay, on both profiles here because we obviously have to start with the base stagnant risk profile. Now, what happens on the next trade? We will risk 150 and we will lose 150. In this case over here for the stagnant, we'll risk 100 and we will lose 100. Now let's continue with this. What are we risking now? We're risking 100 because we lost the trade on the accelerated risk profile. We have to dump back down to our stagnant risk. Well, now let's say we lost this trade as well. Okay, we risk 100 and we lose 100 on both sides. Now we're going to go back up to 100, and let's say we lose 100 again on both sides. 100, and we lose 100 again. Now the last trade of the day, let's just say we won this last trade. So again, we're risking 100 on the accelerated because we haven't hit a winning trade yet, right? Outside of the first winning trade, and we've dropped back down to the stagnant risk profile. This guy over here, we risk 100, and we make 300. Okay, let's get these totals here. So we total this, sum, total this, sum. Here we go. Accelerated risk profile, $250 on the day. Stagnant risk profile, $300 on the day. Again, this is not much of a difference given that we gave ourselves the opportunity here on the accelerated risk approach to make on this single trade 50% more than the whole day here. On this one single trade, we gave ourselves an opportunity to make $450 on this trade, which the win on this single trade would have been 50% greater than the whole stagnant day. So We'll make these green because they were winners. We'll make these red because they were losers. Just for good visuals. This day, what did we run? A 40% win rate, okay? 40% win rate, and both sides of the equation here were green. Let's go for a win rate that's a little bit worse. Now, how could we make this really bad? Actually, you know what we're gonna do here? We're gonna go for a different approach. We're gonna make this easy. We're gonna say we won the first 4 trades on both sides, okay? And now we're going to lose the last trade. Now remember, on the accelerated risk approach, you started risking $100. You're now risking $506. Is it difficult? Sure. Could it get emotional? Sure. Is it up to you to follow the plan? Definitely. We risk $506, and what happens? We take the biggest loser of the day and we lose $506. On the stagnant risk approach, we risk 100 as usual and we lose 100. Well, what's going to happen is mentally you're going to be very choked up about losing this $506 because you're probably used to losing $100. But if we just total these numbers up here and we sum this, we still have a $1,931 day. We take this and we sum this, we have an $1,100 day. Okay, I'm not saying $1,100 is not a good day, but I'm saying if we accelerated our risk on the trades, we end up with an additional $731 or $831, sorry. Okay, that's significant. Very, very significant, right? Make these guys green here. Bear with me. I wanted to actually put this spreadsheet together live for you guys, so you can see what was going on. 80% win rate on this day. Okay, now let's go to a very bad win rate, right? Where we're going to maybe only win 1 trade, and we'll try and make it. We're going to make it a bad win. Like, I don't want to make the last trade the win for the accelerated, because that won't help any. What we're going to do is we're going to make trade 3 the loser on both. Or the winner, sorry. So we've got $100 here of risk, and we lose $100 on both sides here. So 100, lose 100. Next one, same thing. 100, lose 100. Next one, 100. What do we win? 300. It's going to be the same here. We win 300. The next one, we have to risk 150 because we took a winner. And this guy right here, we're going to lose 150. And then we're going to lose 100. Oops. We're going to risk 100. And we're going to lose 100. This guy over here, we got the win. So it's going to be like this, right? So this is going to be red. Red. These are only winners. Good. The win rate today is 20%. We're going to sum this. We're going to sum this. We lost $100 with a stagnant risk approach, and we only lost $150 with an accelerated risk approach. Okay, Dave, what happens if we lose all the trades? I mean, it should be pretty obvious if we lose all the trades. If I take this, paste this down here, take some of these guys, throw them in here. These are losers, and we would also lose 100 down here. Make these guys red, and then we'll sum this, right? Okay, 0% win rate. We lost $500 on both sides. Okay, so let's go through this and check this out. On a 0% win rate, we're in the exact same boat, right? We're losing $500. This is just over the course of 5 trades. If we have a 20% win rate, we are $50 behind on the accelerated risk approach, which is negligible because we're always giving ourselves the opportunity, like right here, to make substantially more than what we initially risk based on the money we have made on the previous trade. Okay, 80% win rate. We are substantially ahead. Okay, you notice on the green days, on the good green days where we've accelerated our risk, we are substantially ahead. The one thing you will notice is we are never substantially behind on the accelerated risk approach, okay? $1,931 versus $1,100. $100. That's an $831 difference. We have another green day here on both. And again, the stagnant P&L is never substantially ahead. It's only $50 ahead. Another green day, 60% win rate. It is never substantially ahead, right? 100% win rate. The accelerated is substantially ahead. Now, I want to do one more thing because this can happen too. You have a 60% win rate. This value is not always going to be the same on the accelerated risk approach. Why and how? Well, if I paste this down here, let's just say this column, or this row, sorry, was here, right? So this row was here, and we go 100, oops, that's 10. We go 100, so we lost 100, and then we would risk 100 again, so we lost 100. These two are good. The next trade, 100, we won 300, same with the stagnant. The next one here would be 150, but we made 450. The next trade here, we'll back that up. The next trade here is 225, but we made 675. Okay, let's change this to green, and we'll change this to plus 300. Okay, another 60% win rate day. But you see how the trades are structured, right? We've played off our strengths and we've got a string of winners. So what have we done when we're getting this string of winners and we're really seeing the market good? We're paying ourselves. We go like this, we'll sum this, go here, sum this. You see the difference now? Now we've made $1,225 as opposed to the $700. Well, if I take this and I highlight this for you just to make it easier to see visually, and I highlight this up here, these are two 60% win rate days. Okay? The stagnant risk approach consistently made $700, which is great. The accelerated risk approach lost slightly more. It lost $100 on this layout of a 60% day, being win, loss, win, loss, win. But then on this day where we had a 60% win rate, because we pushed our accelerated trades and we got a little string of winners, look at the difference. We've doubled what we made on this structure. Now, can we ever tell when these trades are going to string together back to back? No. But I know just by pure chance, any trader can string together 2, 3, 4 winners. Now, if you're a good trader, you could probably string together those 2, 3, 4, 5 winners more often. Do you need to string together these winners every single day? Absolutely not. Maybe not even every single week. Could you string them together a few times a month? Absolutely. So with this video, I know it was a bit different, but I wanted to push this out there to you guys just so I could get your brains working, looking at different angles of how you could really manage your trades and manage your risks and scale your accounts, not just week by week, month by month, year by year, but actually intraday. You hit one of these days where you string together 4 or 5 winners, this is going to be a huge account boost. Even if you do lose the last trade or the second last trade, whatever it is, it's still going to accelerate your account through the roof, which is great. That's what we're trying to do, capitalize on the opportunity and get bigger when it matters, get bigger responsibly, and this is exactly how we can do it. So if you guys enjoyed this video, please like, comment, subscribe, leave a comment down below. I will get back to every single comment in the YouTube comment section. Until next time, we'll see you on the charts.